Wednesday inakuwaga siku ya clinic ya mfuko. Na leo tunasema kulipa ushuru ni kujitegemea. We're going to be talking about taxes today. Getting into that conversation shortly, but for now, I want to take a look at the local dailies. What are some key stories making headlines today? Big story, front page Daily Nation. Parties in hot race for 2022 numbers. It says, these figures are the strength of parties, and most of them don't want their numbers shared without their authorization. And in case I give them out, it will look like I'm inciting them against each other, as a quote from Underwritten Registrar of Political Parties. So you can take a look at that story. Also on the front page, budget, fuel tax stops list of concerns. You can take a look at that. Let's look inside. What are some key stories making headlines in here? There's a story here. Blind at 31, Evelyn prepares for life in her own world. She is fundraising to pay for rehabilitation at Kenya Institute for the Blind. You can read her story on page 3 of the Daily Nation newspaper this morning. Other stories making headlines, there's quite a bit on politics, especially party politics and where the numbers are concerned. And then there's something here, Mutunga's stinging letter to Uhuru over 6 judges. Only 34 out of 40 judges recommended by JSC were sworn in. And so you can update yourself on what he is saying concerning that. Other stories making headlines in the dailies today. In city slums, death squads and killer. This is on page 10. It says extrajudicial killings linked to Pangani 6 have not only increased, but their tactics seem to have been replicated by other police officers. You can take a look at that story as well. What else is making headlines here? There's quite a bit on the budget and the budget summary. You need to take a look at that as well. Also getting into the opinion pages, you can find out what different individuals have to say about some of the issues that are current in the nation. From the counties in Nairobi, city askaris to be trained by police in reform plans. It's hoped that retrained officers will boost security in the capital streets. I don't know whether that's a good idea or not. I don't know what you think, but you can take a look at that. From around the world, South African woman gives birth to 10 babies. 10. When I saw this story, I thought, when the husband got the news, what was he thinking? How do you give birth to 10 babies? As in 1, 2, 3, 4, 5, 6, 7. How do you nurture them? How do you breastfeed them? I mean, a myriad of questions went through my mind when I read this story. A South African woman gave birth to 10 babies on Monday, breaking the world record held by Millennium, who had 9 in Morocco last month. What is up with people getting so many babies in this season? My friend, what? One day it's just you and your wife. The next day we are a family of 12. My friend, talk about the budget exploding. Wow. That one, read that story and find out the details of that. That's a very interesting story. And then I'm trying to get to the back pages of the newspaper today to let you know what's happening in the back pages. Lakini hii gazeti yangu digital inajifungua pole pole. Back pages, I'm seeing a lot here in terms of classifieds. If you love reading the classifieds, kuna watu wanapenda classifieds. In sports, athletes strike gold in marathon debut. This is still focusing on the recently concluded Eldoret City Marathon. You can read more about that. And then also, lack of a host nation aside, UEFA Euro 2020 is an alluring affair. You can check that out. There's quite a bit on local soccer and also something on motorsport that you can look at there. And then back page of the Daily Nation, parents say will pay school fees but curb the extra charges. Those are some of the key stories that are making headlines in the local dailies today. Grab yourself a copy, keep yourself informed on what's happening locally and also internationally. My friend, swali niko nayo ni hii. Have you filed your tax returns? Ama ni wewe ni wale watu wanangojeaga the last week and then you start telling us how the system is failing. The system is not working. These systems never work. Have you filed your tax returns? Talk to me. 20316 SMS line, WhatsApp number 0786316316. We are getting into that discussion shortly on the Financial Clinic. It is Wednesday. Siku ya clinic ni clinic ya mfuko. As always, bench tumeweka hapo nje, tumesanitize, tumeipanguza, and so we are ready for you today. We are focusing on tax and tax returns, and I have two wonderful gentlemen joining me via Zoom in studio today. I've got Eric Kinoti. Eric Kinoti is CEO and tax consultant at True Quantum Consulting. Eric, how are you doing?
Good morning, James. I'm fine, thank you.
Karibu sana.
Yeah.
We live in a generation today where before you start talking, you have to ask yourself, have I unmuted myself? It's good to have you on board. We also have Jagen. Jagen Murungi is director of Forterra Consulting. Jagen, how are you doing?
Good morning, James. I'm very well. Yourself?
I'm very well. Karibuni sana. It's good to have both of you on the show today. Looking forward to learning some new things. Now, I know we'll focus a bit more on the whole issue of taxes and businesses. But even as we get into this, nyinyi msha file returns ama mnafundisha watu wengine na nyinyi hamja return?
We're about to file ours. First, we sort the patients, then we sort.
You know, it's very interesting. If you visit a carpenter, you realize they make furniture for other people na kwake you go to na stool peke yake. So it has to begin at home. Jagan, have you filed your returns?
Yeah, surprisingly, I filed mine, but I'm working hard at creating some bot that can file my returns automatically for me. Then I'll be left to file yours.
Okay. Let's talk about first of all, businesses and PIN numbers. You know, why is it important for a business to have a PIN number, and what's the purpose of a PIN number where a business is concerned?
Okay. So basically, a PIN is I can call it a unique identifier. Like the way you have your national ID, you have a number. So it's basically a number that helps businesses to be identified for purposes of tax payment, and even for other transactions. Like you can't open a bank account without a PIN. You can't purchase property without a PIN. So there are quite a number of transactions that you need to have a PIN. So for a business, for lack of a better word, I would say it's a must to have a PIN.
It's I'm just listening to the reasons you're giving, and I'm thinking, could those also be the reasons why some people don't want a PIN for their business? Because pengine hawataki kulipa ushuru. You know, they just want to do business kijua kali tu hapa chini chini. Jagan, I don't know what you think.
Thank you, James. I think a PIN is a unique identifier for anyone who is operating or doing a business in the country. And there's an obligation in the law that anyone who is doing such business ought to register and get a PIN number. Now, over time, due to mischief, people have avoided that responsibility or the obligation to register and get PINs.
Yeah.
So then what the Revenue Authority has done, and of course the wider government, is to make PIN a mandatory requirement for most of the transactions you can carry out in this country. Getting an insurance policy, getting a bank account, doing a land transfer, doing importation or exportation of goods or services, you need a PIN. Now, so that tightens the noose around the necks of those who would be tempted to not comply. But what I'll say is, even when you fail to comply because of the fact that you're not doing any of those mentioned transactions, it remains a violation of the law if you're doing business and you're not registered for tax.
Because I'm just thinking, based on what you're saying, you know, somebody may say that since I have my PIN, my personal PIN, staki kuchukua ingine ya biashara. When it comes to all those things you're talking about, opening a bank account, buying property, you know, I'll do that with my PIN. And so, because I want my business not to attract too much attention, I don't want to go into extra expenses, let me just operate as an individual. What's the danger of that?
I think it's a misconception, because ideally, if you're running a business, there are many forms of running a business. You can either run a business as a sole proprietor, where now as an individual where you use your PIN and maybe register a business name. But that does not preclude you or make you avoid that obligation of declaring taxes. And tax is not a bad thing. I don't know why people don't like declaring, because if the business is running losses, you're also allowed to declare those losses, and maybe in subsequent years use those losses to reduce the taxes that you are about to pay in that year. So there's that disconnect. It depends on how you want to run your business. If you want to run it as a limited liability, then the business PIN, that then the liability, a limited liability, then you have to apply for a PIN for it.
Okay.
So it's that misconception that I'll be avoiding taxes by maybe trading with my own personal PIN. The obligations still remain the same. It's just that the form of business is different.
Okay. I'm just wondering, could it be that the whole tax issue sometimes is because people, we want to pay the taxes, yes, but we are not seeing what the taxes are doing, so to speak, because there's a lot of red tape where businesses are concerned, and all these things you have to put in place, and sometimes you're harassed, especially looking at the small businesses. A lot of people are doing small businesses today, and sometimes you look at all the stress you have to go through to operate a business, and you're thinking, and I'm paying taxes and I'm not getting services. Could that be a reason, or is that also a misconception, Jagan?
I think I could speak about that topic for quite a long while, but I'll try to summarize my views.
Okay.
Yeah? The first thing is the place where ignorance is not a defense applies very practically is in taxation.
Okay.
And I'll give you quick examples. First is the misunderstanding that if you don't know that you should pay the taxes, then you should not pay them. And two good examples that have happened in your lifetime, and I know you know that. James is the first one. When the Revenue Authority came out and trying to map landlords and collect taxes from them using their meter numbers, the Kenya Powered meter numbers, and landlords were up in arms complaining that they shouldn't be paying taxes. But in reality, from independence, rental income has been a taxable income, only that the Revenue Authority was not aggressively pursuing that line of taxation. Another thing that has happened in our lifetime is when the Revenue Authority sought to collect taxes from members of parliament through the Parliamentary Service Commission.
Yeah.
Members of parliament made noise, screamed and jumped around, went to court, but still ended up paying the taxes.
Yes.
They had assumed that they were exempt from taxes, but there was no provision in the act of law protecting them from taxation. So even when you're a small business, medium or big business, there is no provision in law protecting you from taxation. The only provision in law that would protect you from taxation is if you are an exempt institution, like an institution which is set up to alleviate the society from poverty or eradication of hunger or human suffering. So that comes with the relief organizations, but even them, they're not automatically exempted from taxation. They have got a responsibility to apply and make sure they qualify. Now, talking specifically to your point of small versus big businesses, in this country, there is a lot of informal economy. But the problem is those of us who are speaking English end up assuming you are working in the big businesses. In reality, the man who is selling bells in Gikomba might appear to you like a small business, but the guy has sold 50 bells this morning worth 30,000 shillings. That's a whooping 1.5 million shillings made in the morning in gross turnover, right?
Yes.
Right now, we are still brushing our teeth trying to get our day going. At the end of the month, probably you won't earn 1.5 million shillings in gross, but your employer will tax you before paying you. Now, tax tends to want to ignore all those nuances and wants to make all of us equal by making it mandatory for all of us to account for our taxes. If you believe you're a small business and you truly are a small business who doesn't qualify to pay for tax, when you do your what we call adjustments of profit, you will arrive at a loss, and no one will force you to pay taxes out of a loss. And the last thing I'll say is, when it comes to taxes, they are defined as those things we pay to government without any promise of being given anything in return.
Okay.
Right?
Yeah.
So when your employer will deduct your pay James and remit it, there is no promise that next week the road near your house will be tarmacked. Now, what the government chooses to do with taxes is something we can address through our members of parliament or through other bodies that are mandated to do that. But first we pay, then we pursue the government to do the right thing with that money.
Okay, that matter is closed.
Thank you.
You explained it well. I know we'll talk about the different kinds of taxes that businesses should be concerned with. But before we get into that, let's talk a bit about the people who work online. I mean, there's been an influx of people who are doing work online, people who are running e-shops and stuff like that. Where do they fall in this whole issue? Because they are also supposed to be taxed, and I know they're required to pay tax, but I'm just wondering, is the framework in place to ensure that all of them watalipa ushuru ama wengine wataponyoka? We're always trying to find loopholes.
So ideally, what the law provides, and maybe to give a background, and Jagan, I think, alluded to this, if you undertake any business, you are required to account for your income.
Yes.
And you basically adjust the specific expenses you've incurred. And then when you're in a taxable position, you pay the taxes. If you're in a loss, you claim that, you use that loss maybe to offset taxes in future.
Mm-hmm.
However, and I think this has been globally, where there's been a shift to the digital economy, where most businesses, and especially we saw an influx during the COVID period, pandemic, where most businesses realized that you don't have to operate under brick and mortar, but you have to be creative on how you get clients to access your goods. And most people set up platforms either through websites or online platforms, where you are using maybe apps to get people to access your goods. So I think the government, and not just Kenya, but even other tax jurisdictions, came up with the digital services tax, where now if you are providing services or goods in a platform, which would be either a website or an app, then you'd be required to account for taxes, which was for residents, it was 1.5% of their gross. So, an example, if I sold maybe some clothes online or some books, digital content, and someone paid me 1,000 bob, I'd be required to account for 1.5 of that.
Okay.
This would be paid monthly and would end up being now being used to offset my taxes at the end of the year. So I'll still be required as an individual to still account for my revenue, then deduct this tax, which was more like an advance tax. Then for the non-residents, it was mostly its final tax for them. However, there's a change that was proposed, so we're expecting to maybe tomorrow here, when the budget statement is shared, to see whether, because there was talk about making for the non-residents, removing the digital tax, or having some changes to make it easy for people to comply.
Okay, there's a question here taking us back to, we were talking about PIN numbers. This one is coming in from Wamboyi Nuthiru. She's asking, do sole proprietors having a business registration certificate only have to get PIN numbers as well, or can they use their own PIN numbers, their personal PIN number?
Okay, I think I'd mentioned on that. So it's a choice really, but if it's a sole proprietor, then ideally you are the business. So you're allowed to use a personal PIN.
Okay, great. Okay, shortly we'll be looking at some of the different kind of taxes that business owners should be concerned about. If you have any questions for us today, 20316 is the SMS line. WhatsApp number is 0786 316 316. My good friend and my namesake Martin Gatoto is saying, what a song for the topic we are discussing today. We are discussing taxes and you play the song that says, I don't really care. It was not intentional, my friend. It was not intentional. Today we are hanging out with Eric Kinoti. Eric Kinoti is CEO and tax consultant at True Quantum Consulting. And we also have Jagen Murungi, who is director at Forterra Consulting. If you have any questions for us, 20316 is the SMS line. There's a question here from Wangoi. Wangoi wants Njagi to share his thoughts on minimum tax. How does one pay tax on losses? The tax discourages startup businesses. What are your thoughts?
James, there's a lot of stuff that's come to my mind, so I just want to dispense of them quickly.
I
don't know whether for purpose of full disclosure, you know that I was shocked to learn Eric is sharing the platform with me. Eric and I worked for a number of years together. So in this tax business, a small family.
Mutanilipa the connection fee.
Macho. Eric will take care of that. So swiftly to your question, I just want to slightly deviate and go back to the previous question which was asked before the break. Then I come back to the question of minimum tax and tax on losses. Now, there's an income tax act that provides that income, and I don't want to quote, I don't want to go verbatim, but I'll say income accrued in or derived from Kenya. All income accrued in or derived from Kenya is subject to tax. So when we talk about accrued in, means James and Jagen are residents of Kenya, they are working in Kenya, they are accruing their income in Kenya. Then derived from means Eric is from Colombia or some other funny country like DRC, and he is selling something to Kenya, and therefore income is coming out of Kenya to him.
Yes.
Now, when it comes to the physical sale of goods, it means that when the goods come into the country, they are taxed on entry. So that tax is done with. When you are dealing with provision of services through physical appearance into the country, there is something we call withholding tax, which is in the topic. That's dealt with. But if it comes to digital services, that means you are in your country, wherever, either sharing content or digitally delivering your services to us in the country. We get into a conundrum on how to tax you, because oftentimes there's no direct involvement with the Kenyan locals who would then be obligated to tax you. So then that's where digital services tax comes in to try and net that person, right? So then the government, and to my pleasant surprise, has moved to remove that obligation from locals to say it's purely for non-residents, because the locals, they can net them either way, because for locals, the accrued-in element takes effect. Now, for the foreigners, the derived from element is enforced through a digital services tax, where upon provision, we expect you to pay something. Okay. So let me swiftly move to Ngoi's question, and if someone has a question on that matter, we can reverse it if it's asked. Now, the question on minimum tax, it's controversial, because I've not been asked my interpretation, it's my take. Right? First, let me dispense with the question on tax on losses, then we go to minimum tax, because they're interrelated. Now, tax on losses is a situation where you, as James, started a business this year, but due to significant capital investment, I want to give you a very good example of a petrol station. You would need 20 to 30 million to set up a good petrol station. Now, when you look at a typical petrol station, the margins for the operator are around 5 to 8%, which is 5 to 8 shillings on the liter. So you need to sell too many liters for you to make that 1 million shillings in year one. Probably you'll break even in year 2 or year 3. Now in year 1, you will be at a loss-making position from the total investment, not from the sale of petrol, because even the first liter gives you a profit of 5 bob. But think about how many 5 bobs you need to collect to recover your that 1 million. So when that means is at the end of the year, when I come as your consultant to file your returns, which I hope you'll give me that job, James, is I will take your total investment and account for all the profit you've made and get to a position where I'll tell you we have made a loss this year. Now we declare to the revenue authority that you've made a loss. Now we don't pay anything. We get a loss credit, which we carry forward to the subsequent year, which again, we go through the motions. And if we are at a loss again, we carry it to the third year until the year when we declare a proper profit, a taxable profit. And that's where we tax now the appropriate percentage and remit it to the revenue authority. Now, a complexity arose because of some, what I would call fraudulent transactions within certain businesses. And I'm talking about, and I'm sorry to be pointing figures, but there are industries like, for example, flower farming. I have a 50-acre flower farm, but every year towards the end, I'm declaring crop losses. So every year I'm making losses, despite the fact that every day huge trucks full of fresh cut roses are leaving my farm for export.
Wadudu walikula maua.
So wadudu walikula maua, mvua ilikuwa mbaya, and such other things. So then with such industries, then the government is seeking to say, let everyone at least participate in the economy by us having a minimum tax of 1%. So the intention here is they cancel each other out. So even if you're in a loss, we expect you on a bare minimum to pay 1%. So that 1% is non-negotiable. So while previously, if I computed your taxes and you ended up at a loss, I would tell you we are good, we move forward. We would end up at a loss this year, but still we would end up paying minimum tax of 1%, irrespective of how much loss we made. Now, my view on that... This is 1% of what? Of your total sales. Which we call turnover. So but my view on that is it needs to be thought out, because there are certain industries where even the profit itself could sometimes go below 1%. So then you might be actually making a profit of 0.8%, but you're being compelled to pay 1%. That means you have to finance it out of a loan or a borrowing. So that's my view. But what I've explained is the reality, and I believe this needs to be looked at.
Wow, asante sana. Eric, back to you. Let's look at what are some of the taxes that business owners should be concerned about, and how do they work?
Okay, thank you, James. I think we've sort of touched on some, but I can just go quickly.
Yes.
So well, the first one would have is what we call corporate income tax or corporation tax, where you run a business, you make your sales, you have expenses, you deduct the expenses, then you undertake a tax computation and you pay taxes. I think the rate currently is 30%. Last year we had a break where the government had reduced to 25. I don't know what criteria was used to bring it back 25, but that's a debate for another day. Then we have withholding tax, which is usually taxes that is paid on what we call professional fees. So for instance, if I consult James on maybe production or a media activity, the professional in that area, their onus obligation is on me, the person receiving the service, to withhold the tax. So if your invoice is 1,000 bob, I withhold, if the rate is 5% for local, for a professional, I pay that 5%. Instead of paying you 1,000 bob, I pay you less 5%. How does that work? That means that at the end of the year, James will have paid taxes in advance. Instead of earning the 1,000 bob, you will find that you'll get less 5%, which now when you come at the end of the year, when you're preparing your corporation tax, you're able to utilize that to reduce. And this applies to both resident and non-residents. And then maybe to bring something else is that the rates will also vary depending on the country we are operating with. If they have what we call a double tax agreement, this is an agreement where government to government come together, sit down, and negotiations are done, and certain rates are agreed, preferential rates are agreed, basically to avoid double taxation in both jurisdictions.
Okay. Before you move on, on the whole issue of the withholding tax, say something about now me. Okay, you've consulted with me. I've consulted with you on the whole media thing. You have paid me, but now you've held back the withholding tax. But what about things on my side? Somebody was asking earlier on about understanding how withholding tax works. For me on this side, not for the business owner, for me on this side, what does that mean?
Okay, so I think what we need to get clear is withholding tax is an obligation on the person paying for the service. So let's start from that point of view. Once we've understood that if I'm getting services from James, and I've paid James and I've withheld, it means James has paid taxes in advance. In James's return, assuming that you do not have any other income in that year, you'll be disclosing your sales at 1,000. Then ideally you are supposed to maybe deduct expenses you incurred. Assume there are no expenses. We'll say 1,000, you pay corporation tax at 30%. And then the taxes that come about, you'll be deducting that withholding tax. So basically it's an advance tax on you, the person now providing the service. On the person receiving the service, then the obligation is just to help the government collect taxes in advance. That's where the obligation ends. And failure to do that, there are also penalties that are levied on. It becomes an additional cost on me, the payer, for not having withheld.
So for me, before you say something, Jagan, for me, then I'm supposed to get a withholding tax certificate.
Yes.
Okay.
And this, with the digitalization with iTax, it appears immediately. And I think the question we've been getting, especially from individuals, you'll find someone trying to file maybe their employment return, and there's a withholding certificate maybe for an investment that they did.
Yes.
So the KRA is requiring you, or the tax, when you're filing the return, you're required to disclose that additional income.
Okay. Jagan, you wanted to say something?
Yeah, so James, the simple thing here is, if you give me a job as a professional and you're paying me, you have a responsibility to deduct withholding tax. If you don't, then the KRA comes, then it becomes your violation. Now, once you deduct and give me the pay, when I'm filing my return, that extra pay, if I was doing 2 jobs or 4 jobs, that extra pay will be showing on my ledger in the system.
Yeah.
That yes, James withheld 5%. So what do I do with it? I declare the total income. Then I compute the tax. Then if the tax was 30 shillings and you had withheld 10, I take credit for the 10. Now what's payable from it, the Revenue Authority, is 20.
It's 20, okay.
So the 10 is your money, only that it's been paid in advance to the Revenue Authority.
Okay. What's the other tax businesses should be concerned about?
The value-added tax.
VAT, the famous VAT.
Yeah, it's called the very annoying tax. Yeah, so yeah, it's the one tax that tends to get everyone irritated.
Yeah.
But I'll say this in very simple terms. VAT, we refer to it as a wash-through tax or a cascade tax that's supposed to be borne by the lowest animal in the food chain. So if you are the bottom feeder,
yes,
you will suffer the VAT. But if I'm a trader, anywhere, either from producer to distributor to retail to wholesaler to retailer, I should not suffer VAT. I will be charged VAT for everything I buy. I'll charge VAT for everything I sell. Now that's where things start becoming complicated. Not everything being sold in the market is subject to VAT.
Yeah.
Some items are exempt.
Okay.
Now the easiest way to simplify this for people is, if you're in business and you are selling items and your total sales are more than 5 million shillings per annum, and the items that you sell are taxable, that is vatable, subject to VAT, you have an obligation to register for VAT.
Okay.
If you've made that threshold of 5 million sales of taxable products and you have therefore registered for VAT, you need to start issuing VAT compliant invoices to your buyers. VAT compliant invoices have got 2 elements, one called an ETR, another one called an ESD.
Yes.
Now, once you start issuing, once you've met the obligation, therefore you've registered, therefore you've started issuing compliant invoices, you need to start filing a monthly return.
Monthly.
Now, the monthly return, yes,
Okay.
monthly return. Failure to which, of course, it attracts a fine of 10K, whether you are doing business or not. The day you made the threshold and registered, irrespective of what happens in your business moving forward, every month your return will be due on the 20th of the month.
Okay.
Now, by the 20th of the month, you take the sales of the previous month, you take the purchases of the previous month, all the items that fall within the VAT bracket and were incurred exclusively for business. You net off the VAT against each other. If your sales were more than your purchases, you end up with a VAT payable. So by the 20th of the next month, you file the return. Now that the fourth obligation comes, and pay the VAT.
Okay.
So it's simple. If you are selling items subject to VAT and your sales are more than 5 million, you have an obligation to register. Once you have registered, you have an obligation to issue compliant invoices to your purchasers.
Yes.
Once you have issued them, you have an obligation to file the return in the next month. Once you've filed, you have an obligation to pay any VAT payable by the 20th of that subsequent month. That is it.
Okay. That is very interesting. Ndio wengine wetu tunaulizagwa, mzee unataka risiti ama hautaki risiti?
Yeah,
and you think about it, and you think about it, and you say, nipatie tu risiti.
Ukisema utaki risiti unapata discount.
Unapata discount ya 16%. Pay as you earn. Let's talk about pay as you earn.
So, pay as you earn, I think most people are employed, and when you look at your payslip at the end of the month, that big chunk called pay as you earn.
Yes.
So this is just a tax that the obligation is on the employer, the person who's employed you. So they'll be required, if you've agreed on a gross salary, they'll deduct the taxes. And this is usually on a graduated scale, with the highest rate being 30%.
Yeah.
And then for anyone earning below 24,000 would not pay any pay as you earn. I think that one was shifted, that the gap or the scale was adjusted last year just to cushion most of the people.
Okay.
So for pay as you earn, again, the obligation is on the person paying
the employer.
The employer to deduct and remit. Now there's a twist here, maybe just to expound. there's this talk, and mostly with people who, either a consultant like Jagan and myself, we've employed guys, we tend to try and twist and say that I'll call my employees consultants. So that I only deduct 10% in the case of withholding,
yes,
and pay them. So I just thought I'd bring out, there's a risk there, because there are many things or factors that we look at. And to give maybe 2 examples, the first one would be, what kind of relationship do I have with this person that I'm trying to force to call
a consultant?
A consultant. Are they reporting to my premises 8 to 5? Are they working on maybe similar projects day in and day out? Am I giving them the tools of trade? Because you hear someone, I've engaged consultants in my office, but the same consultants are applying for simple things like leave.
Yeah.
As a consultant, I'm allowed to work for a number of projects or assignments and agree on the fees. So I think on pay as you earn, and for the employers, it's a very punitive tax in terms of penalties for non-compliance. Because if you don't remit the taxes, then there's a penalty of 25%, and then interest at 1% every month.
Okay. In fact, I wanted to ask something on that, because sometimes I hear cases whereby, somebody employs you and they tell you, I'll pay you 80K, lakini mambo ya tax jishughulikie. Is that a legal way of doing things? And then what happens when you go to file your returns and you discover that your employer has not been remitting?
I'll tackle the first one.
Yeah.
Sorry, Jack.
Yes,
So in terms of,
go ahead.
I can tackle the second. So in terms of that employer, the person paying you, telling you, I'll pay you 80,000, and then mambo ya tax ujipange, the obligation does not shift. Because ideally what it means is that they are paying you 80,000 plus the taxes above. So your gross is 80 plus the taxes they would have remitted to the KRA. So the obligation still remains with the person paying.
Okay.
Yeah.
What about when you discover, Jagan, that they've not been remitting?
So there are two things here. The PAYE is the only tax where the one being taxed does not suffer anything much. Like you as the person who is employing me has got all the burden.
Yeah.
So therefore you have the obligation to deduct and remit. Now we've spoken about failure to deduct, where you tell me, go ahead, you take care of it. There is even no provision within the system of KRA where I can walk up to them and tell them my employer paid me more, therefore I need to pay you tax. So in the event then they deduct and fail to remit to the Revenue Authority, there is something called a P9A, which is a deduction card that an employee is supposed, or an employer is obligated to issue their employees at the end of the year.
Yeah.
I have that with me, and if I go online and find that I cannot file my return because my employer didn't remit my taxes, I just need to communicate with the Revenue Authority and say, here is my P9A showing all the tax that was deducted from me, and therefore because the card has got both the employer PIN and the employee PIN, the Revenue Authority will do the necessary follow-up. Because even from my ledger, there will be no penalties showing there.
Yeah.
Of course, it's good citizenship to disclose that information to the Revenue Authority, but you could as well choose to keep quiet. And there would be practically no harm to you as the employee if you didn't disclose it, because there's nothing that would be showing that tax was deducted from you and not remitted. But then the problem with that is, in case then it comes up later in future, it can deny you a tax compliance certificate.
Okay, great. Before we run out of time, because we have like 3 minutes, naonekana kuna malandlord wanatusikiza na wanangojea sana hiyo ya income hiyo ya rental tax. So 2 questions here. One is asking, why does the government demand 10% on gross rental income and not net rental income? And then somebody else is asking, how do I calculate rental income tax?
So I could quickly run through that. The rental income, if you are making rent of less than 10 million, is when you fall under MRI, which is monthly rental income. Secondly, the government realized there's a lot of complexity for most of the landlords in computing the net rental income.
Yeah.
And then there were a lot of issues around justification of expenses. if you're a landlord and you tell someone to bring 10 wheelbarrows of sand for some repairs on the staircase, then at the end of the period, you're looking for those receipts or invoices. You cannot even find them.
Yeah.
So that's when the government chose to give the option of taking your gross income, taking 10% and paying it to the revenue authority. The important thing is, if you go that route, once you pay that 10%, it's done and dusted. There's no obligation, there's no requirement, there's no other return you need to file. Now, you can opt out. That's one thing I need to point out to those who have asked.
Yeah.
You can opt out of the MRI, the monthly rental income arrangement, by notifying and applying to the commissioner that you're going to go through the net income computations. That is, if you're very confident that your record keeping is up to scratch, and therefore you can always, if challenged, demonstrate that those expenses you've claimed were actually incurred. So it's either you feel you are comfortable with the 10%, you pay it, you're done and dusted, you move forward, or you opt out. Now, if you are in a bracket where your monthly gross rental income is more than 10 million, you don't have to go through the MRI.
Okay.
That one you are required to go through the normal corporate income tax.
Okay. As we finish, Eric, one comment on turnover tax.
So, one comment. Turnover tax is basically a tax you pay on your gross sales. It's at 1.5, and this is applicable to businesses that earn revenues of $1 million to 50 million. So if you're in that bracket, you'll make the decision of paying taxes, the 1.5, and that's your final tax, which is paid on a monthly basis. However, usually say before you make that decision, you need also to look at your margins.
Okay.
Because that 1.5 could be more than the margins that you make in terms of your profits.
Okay. Gentlemen.
So business maybe the expense is large or cost intensive. So,
okay, as we finish, somebody's asking, is there a place I can get all this information about the different taxes that I should be concerned about as a business owner?
I was about to say most of it's in our minds, but to share any information on tax, I think if you check social media, you can always get our contacts.
Okay, great. Asante.
James, I'll just say this quickly. There is no one fits all with the taxes, because as you have heard, there are too many complexities.
Yes.
All the information is available, but it's always appropriate for us to understand what kind of business you want to operate.
Very true.
And we always offer options on optimizing your taxes, because there are always different games you can play with the numbers to make sure that you are compliant, while at the same time you're not shooting yourself in the foot.
Very true.
Thank you.
Gentlemen, thank you so much. This conversation has been very informative. Now I see why both of you are consultants. You're very good in explaining hard things in a simple way for us to understand. In fact, Phoebe from Nyeri has got one comment today. She says, very professional professionals. The two of you are very professional professionals. We appreciate you. We will definitely find time and do this again. I'm out of time for our clinic for today. Where tulipe ushuru tuache excuses. Kulipa ushuru ni kujitegemea. Have a great day. We'll connect again next week.
For this and more of our shows, log on to www.familymediaonline.com to enjoy a wide variety of programs, from current affairs to testimonials and features, pastoral and inspirational shows, kids entertainment, and so much more. Also stream live on www.familymedia.tv.